In this video, we'll take a look at how to create cash-based budgets in Float. Your cash flow table includes all of the information about your business's cash. It contains all your historic cash transactions, as long as they've been matched or reconciled, information about the bills and invoices you have due, and your forecasts that aren't necessarily related to an invoice or a bill. We group your chart of account categories into cash in and cash out. We also have net cash movement and end balance at the end. To add or group any categories, you can do that in the Category Manager tab. You can go back into past months here and click on them to see what has been spent and received, as well as how much of the cash budget was paid. You can then click onto each invoice or bill to see all the detail, which is one of the reasons why Float is much more reliable and insightful than a spreadsheet-based forecast. What you need to do is create forecasts for each of these accounting categories each month that you expect cash to move. The initial setup might take a bit of time, but once it's all set up, we automatically update your forecast with invoices and bills from your accounting software every day, so you can track progress towards or beyond your forecasts. It's important to note that forecasts in Float act like empty placeholders that fill up with invoices, bills, and transactions from your accounting software as the month goes on, so nothing gets double counted. To enter a forecast, click into the month you want. So we'll look at advertising and marketing this month. We want to put in the total figure of cash we expect to spend, including tax, and we'll put the date for when we actually expect to spend it rather than be invoiced for it. And that's the key difference between a cash flow and a P&L budget. A cash flow forecast shows your cash movement when you'll actually spend and receive money, which makes it a lot more real than a P&L. So we have a Facebook advertising budget going out on the 1st, and a Twitter advertising budget going out on the 15th of every month. So we'll enter those budgets now. You also have the option to set the frequency of the budget here. We'll go with monthly. And now you can see those cash budgets in all future months. Remember that Float doesn't automatically calculate your tax for you due to the large variety of different tax rules and regulations around the world as we work globally. All cash comes into Float inclusive of tax, so if you do pay VAT, GST, sales tax, or corporation tax, you'll need to enter those as forecasts as well. Your accounting software should be able to produce a report on expected tax payments for you, so you can enter those into Float. If your tax line doesn't show up initially, you can add it in via your Category Manager tab. So here we've set a quarterly recurring budget of £7,000 of VAT tax. It might not necessarily be exactly £7,000, but at least I've got a placeholder here that reminds me I need to allocate close to this amount to spend each quarter on tax.